KB Home just released their earnings, and what does that signal for self-storage? Bottom line, it's not great. It's not great. We're going to dive into it today. Welcome to the Self-Storage Report. I'm Chris Berg. Thanks so much for joining us. Now, why look at a home builder's earnings? What does that really signal? What does that tell you for self-storage? And when you start to dive into the home builder's earnings, whether it's KB Homes or Lennar or others, you start to see where they believe the growth is going to be happening for different markets. You can see, obviously, we all know that home sales and people moving is really a big demand driver here in the self-storage industry. So it gives you an idea of what kind of movement is happening right now in the market. And again, when I show you the data, it's not a positive sign for self-storage demand. And it's been that way now really for quite some time in the industry. So just something you want to be aware of and be thinking about as you're either developing or doing acquisitions. A couple of things to note from the earnings call for KB Homes. They bottom line said, because of the situation in the Middle East, you've got a very, very tepid consumer right now. They're concerned about their ability to have a job, to hold a job. And they put that on top of what's going on with AI. You can appreciate and understand that. Also, they're really concerned about raising fuel prices, so their disposable income. I'll show you some data points about how it's impacting consumers right now in a moment. And then, of course, they're worried about interest rates. We've talked before, and I'm going to give you a really good clip coming up here about why you can potentially anticipate actually higher interest rates in the future, rather than many people thought when worse comes in, they're going to get lower. That just may not be the case due to what's happening over in the Middle East. All right, I think here's a really fascinating graphic to check out. This is Charlie Bolello, does a great job with charts and whatnot. But you can see here, 42,000 U.S. home purchases were canceled in February. He says this is the highest cancellation percentage for any February on record. So you start to think about, there's millions of people less coming into this country, which is obviously a lot of movement. You see this in some of the markets where rental rates for multifamilies going down dramatically. And then you got 42,000 home purchases. Like, that is the driver for self-storage, just canceled, gone, the highest ever. So again, you can see self-storage demand cratering from that perspective. All right, let's dive into the actual KB Homes data here. And you can see what they're showing from Q1 2026 and Q1 2025. Housing revenues down 23%, deliveries down 14%. The one maybe good thing to see, even from a self-storage perspective, is that the average selling price down 10%. So in just a year, from Q1 2025, $500,000 down to $452,000. Everyone's been talking about the affordability crisis. So from just a pure K-shaped economy, consumer concern about inflation, this is maybe the one positive note from a self-storage demand driver that came out of this KB Homes conversation. Just to put it in a few different ways to look at, also from 24 to 26, housing revenues, you can see here, down dramatically. Average selling price. This might be the one good thing to take away from the KB Homes conversation from the earnings report, from the consumers. And this hopefully is going to get people moving again. Again, I think we're going to bump up against inflation with oil prices. You're going to bump up against potentially higher mortgage rates. So it may actually drive this number down a lot more over the coming quarters and potentially years, with who knows what's going to happen in the Middle East and oil. This one I think is really important in home building operating income margin. Because of prices being up and people concerned about jobs and not as much movement, they're trying to buy down interest rates. You're going to see here in a moment that their expenses are actually going up. So the operating income margin, I mean, holy cow, right? 24 from almost 11% down to 3%. How many of us in self-storage can relate? You got property taxes going up, insurance going up. So we get it and can appreciate their pain from that perspective. Gross profit margin, you can see here again, down, almost 6% in just 2 years. So I want to share with you something that's really fascinating. We've talked about this before on the show, but this is a 5-year vision, if you will, of the KB Homes stock chart. Thaddeus and I said back as we were talking about what happened here in September of 2024, this is really important to note, especially in the context of the 18.6-year real estate cycle. What's fascinating about home builders, and I can go on and you can look at Lennar and DHI, and I can go on down this list here if you wanted to, but when these home builders top, and Thaddeus and I talked about this, is probably, we didn't know for sure, but this is probably going to be the top here, meaning the all-time high for these home builders. Couple interesting things to note. One, this is right when Jerome Powell actually started to raise rates. So thus you see this dramatic drop in the stock. But secondly, what this has signaled, at least in the past cycle, that 2006, 2007, 2008 cycle, is that home builder stocks typically topped out, had an all-time high 2 years before the market just went kaput. Now, is that going to be the perfect pattern again? I don't know. This isn't financial advice. But if you're a person that believes that history rhymes, this is something I think you definitely want to keep your eye on and watch. How does this thing move, especially over the next 3 quarters? Right now, not good. You're coming back down here to potentially a new low over the past, March of 25, so year or so. So just something you want to keep your eye on from that perspective. I think this is another important data point that you want to see here. Mortgage demand drops more than 10% as rates hit the highest level since October. We talked about this briefly on Tuesday. Mortgage rates for the first time, this is October, was August, above 7%. Bottom line is the fact that mortgage rates are going up. You're going to continue to see less and less demand in the self-storage industry. Because as we said before, many people are locked into those 3-4% mortgages. Thus, they're like, why would I want to move? What's the point of moving? Which again is going to have an impact on self-storage demand. One other thing I want to note here, Darius Dale does a great job from a macroeconomics perspective. I want to share this with you if I can get this to work. But one of the things we talked about on Tuesday is that if this situation in the Middle East continues as is, you're going to see the Gulf Coast countries have less and less liquidity to buy treasuries, to buy equities, which has obviously been why we've seen the S&P 500 do what it's going to do. But if there's also less money there to buy treasuries, that's potentially why you could see rates actually go higher, especially that 2-year, which signals that the Fed fund rates is going to be going up as well. But he sort of breaks down that there's a liquidity crisis going on. If you've had these barrels of oil not hitting the market because Iran potentially is going to continue to keep the Strait of Hormuz closed, you're going to see huge inflation spikes because there's obviously not as much supply, but also it creates this liquidity crisis where the GCC countries are not buying treasuries and equities. So here's Darius Dale from 42 Macro breaking this down. So I don't know if you can see what's going on over in some of the Asian countries, but what I've seen, at least on social media, is you've got I didn't even get a chance to move over to play that Darius clip for you. I apologize. Um, so I don't want to replay that for you, but you can see it's on Twitter here. It's around the 7-minute mark if you want to go listen to that again or see it. But the important thing for us is that, look, if these guys don't have the liquidity to put out into the markets, that's a problem. And that's why we haven't seen the markets do much as of yet. But if this continues, you're going to see the price of oil continue to rise. It's obviously going to get into people's disposable income. And that's why we've talked here before. You're going to continue to see, I believe, demand for self-storage go lower and lower to the point where even yesterday I had a comment on a LinkedIn post I had where you could potentially see people start saying, hey, do I pay for my storage site or do I put food on the table, right? Do I pay for storage or do I put gas in my car? We're not there yet, but with inflation and where the price of oil could be going and what's going to be happening at the pump, it's a potential possibility you just want to be aware of as you're continuing to, what are you doing from an occupancy standpoint, ECRI standpoint, acquisitions, development. And again, this is a big reason why, because no one, I believe, does a really good job talking about self-storage demand, why we built the storagedemandscore.com. Again, you can check it out at storagedemandscore.com. But it's really a great tool where you can put in an address of a site you're looking at. Maybe it's an acquisition or development. Put in net rentable square feet that you're projecting to put in the marketplace. Hit this button. Tract IQ is going to then spit out the information you need here. You come down, you hit this button for your demand score, and it'll walk you through and tell you Hey, are you scoring at a 1 or less, which is very, very weak demand? Are you between 1 and 2, which is moderate? 2 to 3 is healthy demand. If you've got a 3+ demand score, you've got very, very healthy demand in that market, which typically is going to translate obviously to very good rental rates. So we'd love to know your thoughts on what else you're seeing in your particular markets. What's your take on what's going to be happening with storage demand based on what we just talked about here with KB Homes and the dramatic, I guess, drop, if you will, and what they're doing from just moving homes. Again, the only, I think, really good thing coming out of the KB Homes earnings conversation was the fact that there's been a 10% drop in home prices from roughly 500 grand down to 450. I think it's going to continue to erode, which is going to ideally create more movement, which is good for self-storage demand. So please share this with your colleagues. Again, thanks so much for joining us here on the Self Storage Report. I'm Chris Berg. We'll see you back here again soon.